Thank you very much. Could we have the slide, please? Thank you. All right, so today we're going to discuss about the future of insurance pricing and how will new technologies and regulation shape the industry. So we have 3 speakers that are going to present themselves. And first, we're going to start with Sato-san from AXA Direct Japan.
Nice to meet you, everybody. My name is Kenichi Sato. I'm just from Japan. I'm the Chief Technical Officer of the AXA Direct Japan. We, this group, just opened our business in conjunction with the deregulation of the Japanese market back into the 1998. We just operate our business with the 931 employees. And our primary target customer is the retail market, specifically for the family segment who has small kids. Our core product is the motor on the distribution channel, the D2C channel. And our strength to lever of the business is in the next page, please. Just provide a key attractive price level to the customer to attract them to just select ourselves as a motor insurance policy. And we just released a very brand new premium incentive last year for the parents who have small kids, which was a very brand new element in the Japanese market. We are just steadily growing our top line, like 1.6% growth last year, while the quite favorable combined ratio of 86%. I'm very much excited. Just talk about the price and talk with just here with everybody. Thank you.
Thank you. And now we have Thibault from Munich Re.
Thanks, Lucy. Welcome, everyone. So I'm Thibault Imbert, Senior Insurance Solution Manager at Munich Re and member of the Global Consulting Unit. So what we do is to support our clients, so primary insurers, but also insurtechs, verticals, in their primary insurance-related operations. So here you can see 2 pillars, so mainly on the risk advisory part, so setting up new products, and also on the portfolio performance with a strong pricing component. So pricing, rate making is something fundamental in our daily activity on different markets, so be it more mature market, G-tariff market, more regulated market, or developing markets as well.
All right, thank you, Thibault. And now we have Samuel from Akur8.
Hi, good morning, everybody. So I'm Sam, and I'm a CEO and co-founder of Akur8. So Akur8 is an insurtech that is dedicated to one specific use case, which is insurance pricing for P&C and health. And we developed an insurance pricing platform that leverages a proprietary machine learning algorithm to automate significant part of the modeling process for insurance companies.
Okay, now the first question would be, what drives innovation in pricing today?
Okay, so yeah, good question. So I think definitely what drives innovation in terms of pricing is the multiple sources of pressure that insurance companies have to face with. And so I would say first pressure, of course, is competitive pressure. We see new entrants on markets. We see in some markets that there are some more advanced players that start increasing their sophistication, which means that they are better selecting the risk, and which drives the whole market towards increased sophistication. So competition is one thing. Second thing, certainly regulation that has huge impact on pricing. We see in some countries in APAC that were historically tariffed markets that the regulator is given a little more flexibility to build more customized prices. We see in other markets like the UK that were highly deregulated that the regulator is trying to increase the control and limit the flexibility. So regulation does have a high impact. I would say third one would be increased loss ratio. We see in many markets, many clients that tell us that they have on some lines loss ratio that are increasing in the last years, which drives top management attention on pricing. Fourth point, I would say the overall global acceleration with the new digital native population. Things need to go fast, which means that insurance companies need to be much more agile. You need to be capable to launch new products much faster than what you did in the past. So that also increased pressure on the overall pricing process. And maybe last point, would be the shortage on resources. Very tough to find senior experienced resources on pricing actuaries. So it pushes insurance companies to increase automation so that their key resources can focus on the expertise part of the process.
All right, the next question will be, how are artificial intelligence and machine learning transforming pricing processes? So this goes to you as well, Samuel.
Okay, yeah. So definitely machine learning can improve the pricing process for insurance companies at different levels. So first of all, when you talk about machine learning, you talk, of course, about automation. So you can really increase massively the modeling speed. What we see is that typically when you use automated machine learning solution, you are going to decrease the modeling time by a factor 10. So it's a major impact for insurance companies. Second benefit of machine learning on the pricing process is to remove any constraints of the capability to process data, which were like human constraints. And so because of the cloud, because of machine learning, you can process any volume of data, and which is very important because you see that today there are more and more external data available, and to be able to process all those new data sources, of course, automation has lots of impact. Third point, increase of predictive power. Because of course, machine learning algorithms are going to test all potential solutions and allow you to pick the most performing one. So on average, you improve the predictive power of the models, which means that you can better understand your risk, and so better anticipate those risks, and so improve the loss ratio in the end. And finally, of course, because of automation, you reduce the risk of human errors in the process.
All right, the next question would be, what does pricing with transparent AI look like?
So basically, the challenge that we are facing now is that we have these two legs, I would say. The first one is the traditional manual pricing. So for pricing actuaries, we typically be GLMs, so things that are long, requires months, the pricing effort is months, a lot of manual intervention. So these are a bit the hurdles that Samuel mentioned. And on the other end, we have machine learning techniques, which can address all of these pain points, but we also have generate new hurdles, I would say, adverse selection, regulatory issues, so black box things, also we can't explain. So the way we see it and we define transparent AI is to use what we define as AutoML to combine the both. So it is transparent AI. So what is AutoML? So AutoML is really the way we see it really as the future when it comes to insurance pricing, which is really to combine the grid search and the software looking for the possibilities with human intervention, giving explainable output. So here is basically the process. So we can really see that traditionally it's manual. You need actuarial effort. Through AutoML, the actuarial effort will be limited. We will use more kind of generalized search concept, finding optimal solutions with an understandable output, reducing therefore manual intervention, and at the same time keeping the actuary as key part of the process, but moving a bit the responsibilities and generating new understandable, explainable model which can be easily implemented, audited, and understood.
Thank you, Thibault. The next question would be, how can insurer implement new technologies, follow the trends, and remain compliant at the same time?
So this is usually through AutoML that we do this. Basically, by going for this approach, we can combine, I would say, the efficiency, the reduction of human error with the potential, the auditability interpretation. So this is really how to combine. By combining, we solve the problem in a certain way because we are efficient and we really leverage on machine learning, AI techniques, and we keep the transparency at the same time. So for us, AutoML is the solution to these challenges here.
Okay, now it would be interesting to understand the operational reality. So Sato-san, could you explain a little bit the pricing process? What are the steps, the stakeholders, and also what are the main challenges that you face?
Sure. Let me just introduce our pricing process in our organization. It always starts with listening to the pulse of business and voices from our customers. Pricing team, Actuary, just take us lead the analytical work in conjunction with the customer-facing function, and just update the pricing model, including the kind of predictive model for the loss cost, as well as the demand for new business customer retention, as well as the financial modeling. After assessment of this updated model, they just construct a pricing plan to materialize the business objective for the year as much as possible. Once the plan is all set, we move into the communication phase to construct the agreement with all key stakeholders internally, such as the distribution, marketing, risk management, finance, and ultimately seek for a formal approval by the pricing committee internally, which includes the key member of the management team, like including myself. Insurance premium, for me, is like a fundamental base which shapes the product offer. Not only that, but even the brand of the company. And it's a key driver of the acceleration of business performance from the top to the bottom line. And therefore, multiple stakeholders are very much interested in understanding of the evolution of price level. And each of these elements tends to be constructed in a complex manner, and as well as each element is changing from hour to hour. Therefore, it is crucial for the pricing team to provide the clear and appropriate explanation to the stakeholder to reach an agreement. And after the internal agreement is made, it's just the final stakeholder is the regulator. In Japan, the market is quite regulated. Therefore, it is necessary to just apply for and agree the formal approval by the regulator, typically in the pricing side. So their primary concern is the viewpoint of the reasonability, transparency, and the fairness by the customer group. Typically, when we try to introduce a new segmentation, they tend to just give us a lot of challenging questions. Let me just give you one example we experienced last year. As I just introduced at the beginning, we released a brand new premium incentive to a customer for the parents who have small kids. It sounds like not that new in the global level, but it was quite new element in the Japanese market. So they gave us a lot of challenging questions and reluctant to approve it simply. We just answered all the questions for them after taking the 1 year or so. And at the end of the day, we got the approval by the regulator, but it was much smaller than we originally wanted to do. So this is kind of a challenging process, following the IT process and the project. Then we can, for the first time, release it to the market. But like this, multiple stakeholders, internal, external, expect us to provide the explanation very clear manner from the different angle and the different perspective. Then the pricing actuary to take the lead and to reach an agreement with all of them. So this is quite a challenge for us.
All right, thank you. Sorry. Okay, so thank you very much, Sato-san. Now we would like to know what best practices you would recommend in doing, like in having new tools, at the same time a safe and traditional pricing process. What would you recommend, Thibault?
So basically, our key vision, I would say, and fundamental principle is to keep the domain knowledge and the technical expertise. So these tools are enabler. They're not here to replace, they are here to enable the people. So our view is always to keep, as we mentioned, the practitioners, so be it underwriters, actuaries, at the core of the practice and of the decision-making process. So the best practice would be not to use these tools as really enablers, but to keep the domain knowledge and to, I would even say, go one step further into this direction. Now, prediction starts to become kind of a commodity, so it comes in a natural way. Less time is required, so the idea would be more to focus on other things, so the decision-making process. So what do we do out of these models? How to implement? Do they make sense? Also, maybe dedicating effort on looking for new data source, looking for rethinking on how to structure the product, all of these topics. So topics that were sometimes a bit overlooked because the focus was on the prediction. Now the focus is more on what comes after the prediction and how to make the best out of this prediction. Of course, data is still key, so we won't replace data cleaning, preparation, all of these things still remain at the core. But then our best practice is really to shift the mandate of the practitioners into something which is more into the decision-making process, also on the reviewing process, because there is less effort done to building the model, so let's spend maybe a bit more time of reviewing and understanding the model, and then thinking one step ahead on how to understand business requirement, what are the needs, and how to make the most out of this model in a realistic context, be it regulation, be it also sometimes partners, how to deal with this type of new challenges.
All right, thank you. Now the question would be how a data-driven tool can enable or empower actuaries, and what did it change for the actuaries in your organization, Sato-san?
Okay, sure. Before, actuaries, specifically pricing actuaries, have been very overwhelmed by the data analysis, like reserve calculation, loss ratio reporting, and modeling work like a carpenter. Let's say the factor selection from a bunch of variables in the data, and the factor just grouping and smoothing, etc., etc. So because of that, it's quite challenging for the pricing actuary to look over the strategy from a high viewpoint. But as machine learning, like type of the tool is gradually incorporated into the pricing procedure, it takes over the huge portion of the tasks. Then actuary is getting freed up from those tasks and allowed to spend more time on the solutions for the future. So creative thinking, forward-looking, and a strategic mindset. Those are type of the expecting mindset and the role in our organization for the pricing actuaries. And if you take a look at the right side of 2B, an introduction of the artificial intelligence, machine learning type of the solutions allow us to just incorporate a much bigger range of the data. Let's say not only the claim and the policy data, but also the quoting, customers' behavior data, like driving data. Huge volume of the data can be just automated and just delivered in a quicker and stable manner. Put the activator from left side of our management aspiration as well as the business objective along with a bigger range of data into the machine learning in an appropriate manner, and deliver the conduct, evaluate, and interpret the output without having the deep degree and the high degree of the understanding of the algorithm and the mechanics of the machine learning. It is not possible. Here is the area which actuaries should play key role to deliver this kind of framework, make it happen. And at the same time, this is exactly the moment to identify the business opportunity to deliver the new value to the customer. Then help the actuary to architect to business strategy, and if it is effectively communicated with the stakeholders, like I mentioned at the beginning, and influence them, then we can just shape the opportunity to deliver the value to the customer. But whether we can realize this dynamic or not, depending on ourselves, whether we specifically as an actuary, whether we can evolve ourselves into the next level. So this is quite a very important point for me. And also the most recent delivery of the machine learning tool which Sam and his team just developed and just provide us with a very big opportunity for us to take a step into that direction. So really appreciate this kind of tool. Going forward, not only this kind of a tool, but also the kind of strong collaboration with global professionals like Munich Re here and Everyday here. We are very much excited to just evolve ourselves into the next level innovate our product and pricing level and deliver the new value to our client by leveraging the tool as well as our expertise. This is kind of my visionary imagine for the next role for actuary.
Thank you. The last question would be, knowing that insurance has a lot of local regulation, how did you overcome that challenge, Samuel, at Akur8?
Yeah, so that's a very good question, because indeed sometimes we have a client that says, okay, but maybe I do not have enough data, or in my market, in my specific market, there is less competition, competitive pressure, so there is no need to increase pricing sophistication. So what we've seen is that this kind of advanced solution, leveraging machine learning to empower actuaries to work really on the expertise part of their job instead of focusing on manual activities. This is pretty much applicable everywhere in every line of business. If you look at what we have in terms of client at Akur8, we work with very large international group like AXA, for example. We work with AXA in 13 different countries, very different ones. From very sophisticated markets like the UK or Spain to less sophisticated markets like Germany or Switzerland, for example, or less. But it's pretty much applicable everywhere. We work with Munich Re generally, with MS&AD in Japan, so large international groups. But we work also with commercial insurers or commercial specialty. With very much fewer data available, companies like Hiscox, Canopius, Tokyo Marine Kiln. So with the lower exposure, it works as well. So you don't need to have massive auto lines to leverage this kind of machine learning solutions. We work with travel companies. We work with MGAs and InsurTechs, and we work with local players, mutualistic players, as well as with the health insurance company. So it's pretty much applicable in all types of line of businesses and in all types of markets as well. If I look at our client base, we've got clients in 25 different countries, the US, Latin America, all the major markets in Europe, South Africa, and then in Asia, in countries like China, Singapore, Japan, of course. So, yeah, definitely this kind of solution does provide some added value, whatever the market, whatever the line of business.
All right, thank you. So this is it for us. Is there any question that you'd like to ask? Yes?
To this?
Okay, yeah, sure. I can reply, because this is something that we also have identified at Munich Re and within the global consulting unit. That topic, which was almost non-existent before, starts to become something key. So on how to address it is we are currently working on it, on how to take into account the fact, not necessarily simply having the factors, but building methodologies. So our approach would be to build on top of the prediction, I would say, on the side. And that's typically here that we see the benefit of a solution such as Akur8, because we have the prediction and we can address this topic. So there's a bit of tricky nitty-gritty details in it that we are working on, but at least we have the resources and the time to focus on this part, which becomes which will be one of the key topics when it comes to rate making in the coming years.
Any other question from anyone? If not, one of the question would be, what would be your advice to a company if they want to implement such tool?
Okay, so let me just provide one point. When you just try to introduce a new tool, that one of the big benefit, as just Sam mentioned at the beginning, even the junior actuary or non-actuary staff who do not have the clear understanding of the mechanics can deliver the kind of output, then conduct the modeling work like professional. But unless you have the specific one key person in your organization, it's going to be difficult to just interpret and materialize the output into your business structure. So, and also the specific professional in your organization needs to evaluate and probably make an adjustment on the output of the machine learning output. Unless you have this kind of professional judgment in your organization, probably that is one of the risks to create misleading. So this kind of balance between the machine learning and professional judgment is critical. That's my advice.
Anyone else?
Personally, I would say in the way we implemented it was also to maybe change a bit the way the teams work. So before we are used to have maybe a bit more in silos. So we have one, I don't know, let's take motor, and we have 1 or 2 persons focusing on MTPL, focusing on damage, same for household. Here will be more, I would say, trying to structure in a different way where someone will be more focused on the data, someone in reviewing the model. So this is also how we made our organization and the way of working evolve. And even on the making sure on the audit of the modeling, on all of the process, we changed it also because the focus is not exactly where it used to be in the pure quality of the model, it's elsewhere. So typically in the expert judgment, all of these things. So we organized ourselves, I would say, a bit more fluid to better address these challenges.
Okay, thank you, Thibault. And Samuel, what would be your advice to a company that wants to implement a pricing solution?
Yes, I would say just implement Akur8. No, I'm kidding. Maybe what's important, I think, is I think on this kind of topic is to move fast and to try to be in the early adopters. What we see in the different markets we are working is that there is a real benefit of being the first one or being part of the first movers, and there is also a high cost of the status quo, because if you've got some competitors on your market that start increasing their sophistication, so meaning that they are going to better select the risk and it means also that you will see an increase of bad profiles or risky profiles, risky segments that more sophisticated players are not going to underwrite. They are going to be much more present on the market. And so when you have companies that increase their sophistication, it means that the ones that do not work on it are also attracting more and more of the bad risks that the best performers do not attract anymore. So meaning that the status quo also has a cost in terms of loss ratio. So I think it's really important to embrace technology and to start whenever possible. And if I just speak about what we do at Akur8, we are offering any company to run a pilot. It's free of charge, so you can very quickly, in like 2 weeks, you can assess the benefits of deploying such a machine learning solution within your actuarial team, assess the speed, the improve of the models in terms of predictive power. And so it's very easy to quantify the benefits and then afterwards to take an informed decision based on the benefits for each other's company.
All right, thank you very much. So if you'd like to know more about Akur8, we're right in front, next to the coffee area. Thank you for your attention and happy lunch.